Hello and welcome. Moss Adams is pleased that you've joined us for today's session, Navigating ESG Trends in the Food and Beverage Sector. Before we begin, I'm going to play our housekeeping video.
Welcome, and thank you for viewing our webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls of the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right. We have some great presenters with us today. We have Jamie Reznick and Madison Poitras, both senior managers here at Moss Adams. Their bios and contact information are in your console. And now I will turn it over to Jamie to introduce himself a little bit more.
All right, thank you so much. Yeah, hi, I'm Jamie Reznick. I'm a senior manager with Moss Adams here. I work out of our Portland office location, and I'm on our assurance side. So I spend the majority of my time working on financial statement audits. I'm working with food and beverage companies. Been with Moss Adams my entire career since 2006, and just joined our ESG group here in the last year and a half or so, and have been enjoying the journey and figuring out the ESG space with a lot of my clients. So happy to be here, and I'll pass it off to Madison.
Yeah, thanks so much, Jamie. Hi, everyone. My name is Madison Poitras. I'm an ESG senior manager, part of Moss Adams Consulting Group within the strategies and operations practice. My background really has been focused in ESG within a variety of industries related to ESG regulatory compliance, reporting with ESG frameworks, internal controls over ESG data, and overall ESG strategy. So without further ado, we have a very exciting agenda today. Today, we're going to cover what is ESG, business case for ESG, ESG trends and challenges, ESG regulatory updates and expected impacts, and then we're going to conclude with how Moss Adams can help and sharing some applicable resources. The learning objectives today of today's webinar is really understanding the fundamentals of ESG, top of mind ESG items, including those proposed and finalized regulations in the United States, and the impact that it has or could potentially have on the food and beverage industry. So before we get into the content, I'm going to pass it back over to Amy to go over our first polling question.
Thank you, Madison. So the first polling question is, how familiar are you with the concepts of ESG? And your options are A, not at all, B, a little, C, somewhat, or D, I'm an expert. And the polling questions are located right on the slides that we're presenting. So if you can't see it, you can just hit the F5 key to refresh your console.
Yeah, I'm expecting a mixed group today. Some folks have been in this for years, and some folks are still understanding what the acronym stands for. So it's usually a mixed bag, but it's good because today we're going to cover the fundamentals, but also, go into specifics for those more seasoned folks that are familiar with ESG topics.
All right, I'm going to pull up the results here.
All right. Okay. This is actually different than what I was expecting. We have somewhat. So I will go quickly through the first part of our webinar and kind of get to, the industry trends and the regulations. This is exciting. This means we have, a good seasoned audience. All righty. Yeah. So what is ESG? So it sounds like everyone is pretty familiar. For those that need a refresh, though, environmental, social, and governance. ESG is really a set of factors that businesses globally are using to help better capture and communicate decision-useful information to a variety of audiences. It's really an opportunity for organizations to tell their story, whether that's taking credit for all of their ESG objectives, and honestly, many times it's acknowledgement of improvement areas and goals to be better in the future. So let's break down each letter in ESG, starting with environmental. Environmental information includes considerations of things such as greenhouse gas emissions, the use of water, the release of waste, and the use of other natural resources such as forests. It addresses not only the use of energy and physical resources, but it's also the transformation of the economy and value chain. So to give you a flavor, some environmental metrics could be anything from energy usage, energy intensity ratios, water usage, greenhouse gas emissions. We'll talk a little bit more about what that means from a regulatory landscape. Social. So starting now with the S, it refers to resources contributed through relationships with humans. There are many ESG data points that relate to human resources. It can also be called human capital or human capital resources. These include information about employee turnover, diversity, and training. But it can also include data over protection of personal data that an organization collects. So some flavor of social metrics include employee turnover, gender diversity, injury rate, human rights, global health and safety metrics. And last but not least, we have governance, which refers to how an organization executes its transactions and manages its business. Governance metrics can be a myriad of things, but some examples could be board diversity, board independence, a supplier code of conduct, or ethics and anti-corruption metrics. So where does ESG show up in your organization? Where does it live? From this visual here, you can see that ESG can add value to various operations within an organization and impacts a variety of stakeholders. So for example, ESG is now a large factor, part of your compliance function. From specific environmental or climate related regulations, such as the California Senate bills, which I will talk about a little later in this webinar. ESG can also add value related to the E in ESG within the tax group, such as investment tax credits, deductions for energy efficient buildings. Furthermore, ESG can add value reputationally for an organization by appealing to their stakeholders via communicating their ESG goals and initiatives. From an industry perspective, an ESG report allows an organization to provide comparable data to support their competitive edge or by benchmarking against their industry peers. ESG is really a holistic approach that influences the entire business model and operations, and that's what this visual is really trying to represent. All right, picking back off my next slide, or my previous slide, excuse me, we're now going to talk about how the recognition of the relationship between social, environmental responsibility, and financial success has really initiated a torrent of demand for sustainability information. We've seen a large increase in demand for ESG data, and that demand has only increased in recent years due to a variety of reasons. Outside of seeing an increase in ESG regulations, there's been an increased awareness of sustainability issues. This awareness is leading consumers, employees, and other stakeholders to demand more responsible business practices. Investor interest. Investors increasingly recognize that ESG factors can play a significant effect on their financial performance and long-term development of companies. ESG data helps them assess risks and opportunities that are not captured by traditional financial analysis and really points out what's important to them. Stakeholder engagement. There's a growing expectation from stakeholders, customers, employees, and communities for transparency and accountability in corporate practices. ESG data provides a way for companies to communicate their performance and efforts in these areas. Overall, the growing demand for ESG data reflects a broader shift in the global business and investment landscape towards sustainability and responsible corporate behavior. So here, this slide just shows a couple examples of the business case for ESG. We get asked a lot, what does ESG really mean in terms of my organization and my business? So these bullet points are really high-level business cases of ESG work, ranging from enhancing stakeholder relationships to an increase in capital. The benefits in business cases would change, obviously, based on what industry and the specific ESG work trying to be completed and the pain points that organizations are trying to solve. But for example, risk management. ESG practices help identify and mitigate various risks, including environmental risks like climate change impacts, social risks such as labor issues, and governance risks like corruption. Companies that proactively manage these risks can avoid potential costs and liabilities. Access to capital. Investors are increasingly, as I mentioned previously, considering ESG factors in their investment decision. Companies with strong ESG profiles may have better access to capital as they are perceived as lower risk. And then innovation and long-term strategy. Integrating in ESG factors can spur innovation, leading to new products and meeting evolving market demands, particularly in the realm of sustainability. It also aligns the company with long-term trends and market shifts. So with that brief overview, I'm now going to pass it over to Amy for our second polling question and Jamie to talk through trends and challenges specific to the food and bev industry.
All right, thank you. So the second poll is, do you see ESG being a priority for your company in 2024? And your options are yes, no, or I don't know. And while you're responding, you do have the option to submit questions for the presenters in the Q&A window. So feel free to submit those as we go. We have quite a bit of content to cover, so if we don't have time to respond during the webcast, we will do our best to follow up with you. All right, a few more seconds, and then I'll pull up the results here. All right, here you go.
All right, nice. Yeah, that's kind of what we'd expect. I think ESG is a topic that's not going away, and it's if it's not a priority for your company now, it definitely will be going forward. So yeah, so thanks for that. So next, we're going to talk through ESG trends and challenges that we're seeing, in the food and beverage sector, and kind of what we're seeing with our clients, as well as others in the industry out there. I think, with in the current environment, in the ESG space, there isn't a lot of mandatory or regulatory requirements to report a lot of this information. And so what we're seeing is more voluntary type reporting, and as well as just efforts that align with ESG strategies to kind of get our companies and organizations ready for potential reporting and different things down the road when it comes to an ESG space. So what we're seeing, specifically with our clients and what companies are doing in the food and beverage space, the first area is around sustainable sourcing, and this is becoming an increasingly important initiative for a lot of foods and beverage companies, based on pressure from consumers for companies to use higher quality ingredients, sourced in a sustainable and ethical manner, that really won't contribute to a lot of the environmental and social problems that have kind of come up in the past with deforestation, biodiversity and human rights aspects of the sourcing of ingredients from throughout the world. The next trend and area that's an obvious one, but it's that impact and the response to climate change. And we're seeing more companies implementing strategies to reduce their carbon footprint. These strategies are using more renewable energy sources, improving supply chain efficiency, and focusing on packaging waste and manufacturing waste. Many companies are out there are setting net zero commitments or reduction targets. We'll talk a little bit more about that on targets and the related kind of greenwashing risks here in a few slides. But that's one that is a emerging area and something we're seeing companies focus more and more on. Specifically in the food and beverage space, food waste and food waste reduction is an area that we're seeing a lot of our companies and clients focusing on. And this isn't a new initiative. Companies have always been focused on efficiency, maximizing, returns in the bottom line. But, based on, increasing external pressure from consumers, I think it's estimated that about 1/3 of the total, global food production goes to food waste. And so, we're really seeing companies focus on efforts to minimize that as much as possible. we're seeing strategies, to reduce that throughout the supply chain, and focusing on inventory management, manufacturing processes to make sure that they're eliminating as much waste as possible through the manufacturing process, and then also making sure that their inventory management is sufficient so that the use of any perishable products and things are done efficiently and without as waste. We're also seeing kind of innovative donation programs from our food brand clients and manufacturers, and making sure that there's opportunities to maybe donate some food that's still perfectly good but maybe not saleable. That those things are happening. And then also we're seeing a lot of innovative packaging solutions for kind of the finished goods products, just to make sure that shelf life can be prolonged as long as possible, to help on the food waste side. The next trend, and while not necessarily an ESG driven topic, health and wellness is becoming more and more important to consumers who are concerned about the impacts of their food choices to their health and wellness. So companies are responding by offering healthier products, focusing on salt and sugar content in the foods, and then also really promoting transparency around ingredient sourcing, nutritional information, and those things are a trend that we're seeing. Next, diversity inclusion, and also kind of include employee equity here, has become a really big focus of our food and beverage companies. And I think we could probably all name a couple brands that have been impacted by or come under pressure by kind of the response to various D&I topics. We won't go through that, but it is something that's more out in the public sphere for food and beverage companies especially. And one thing that we're seeing a lot is the adoption or the certification for B Corp status, and where a lot of our clients are moving and trying to or have gotten B Corp status. And I think a lot of the kind of the areas and the initiatives from a B Corp perspective align a lot with ESG concepts, especially in the S and the G space. And so, while they may not be exactly the same, I think companies that have moved to that B Corp or gone down that route will be much more prepared to handle ESG kind of initiatives and requirements going forward. As Madison mentioned, pressure from stakeholders is something that we're seeing increasingly in the food and beverage space, from stockholders of public companies, private equity firms, institutional investors. We're seeing this impact deal markets as well. So in our M&A space, we're seeing impacts to based on due diligence and findings from an ESG type perspective, really potentially changing deal values or deals even falling through because of what was found in the diligence process around companies' preparedness around ESG, or some of the findings around a lot of the ESG metrics that the diligence teams are looking through. So it's something that's out there and something to be aware of, that it is can impact potential deals if there's a transaction that food and beverage companies are working through. Sort of the last trend, again, that we'll talk more about here in the next section with kind of the regulation, is an increasing push from regulators for more reporting and more accountability. We're seeing this for both public and large private companies as well. Again, we'll talk more about that in our next section. But overall, these ESG trends that we're seeing for food and beverage companies, really have a lot of different impacts. One, we can improve sustainability and our social impact by focusing on these areas, and then also there is a tangible bottom line impact to a lot of these areas that if we focus on can also be a driver for growth and for profitability for a lot of our food and beverage companies. The next area that we wanted to talk through and kind of dovetails into a lot of the trends that I just covered is this concept of the circular economy. And with the circular economy, this is the idea where a system aims to minimize waste and maximize the use of resources by keeping materials in use for as long as possible. Which, as we've previously discussed, this is becoming increasingly relevant for food and beverage companies. And I think, their food and beverage companies are uniquely positioned to kind of address a lot of these concepts and be part of this circular economy concept. And so, many of the trends that we've discussed align with the goals of circular economy, reducing food waste, designing products and packaging for reuse, recycling, composting, and then using renewable energy sources to promote low carbon economy. Wanted to kind of make sure we're introducing this topic. I think this is something that is going to become more and more discussed as ESG becomes more kind of mainstream and part of our overall management structure. All right, so we discussed a lot of the trends. So now let's talk about the challenges that companies are facing while we're trying to impact those trends that we've discussed. Kind of look at how we see the challenges and put them in four main areas. The first is regulatory complexity. I think right now there's a current lack of consistent formal guidelines that are out there, and there's a lot of competing frameworks and regulations and things that are hard to keep track of. I think keeping things straight can be a challenge. Several different concepts, several different frameworks, and then you have some of the actual regulations starting to come to the forefront. I think from an acronym standpoint, I used to think public accounting had a lot of acronyms, but getting into the ESG space and learning more and more about the ESG landscape, there's probably more acronyms in that than in public accounting, which I didn't think was possible. So again, it's hard to, I think that's a challenge for a lot of people. It's just keeping it straight and really understanding what they should be focused on and what framework and what regulations are out there. The second challenge, and probably the most important, is cost. I think implementing ESG initiatives can be expensive, particularly for smaller companies, with limited people and resources. These initiatives may require investment in new technologies, additional staff, and operational changes, including supply chains, and all of those things can cost a lot of money. There may be also the requirement to hire external resources as well. So that's a big challenge that I think a lot of our food and beverage companies will face. Finally, our next is external stakeholder pressure. I think we've talked about that a couple times here. So we'll go to the next one, which is technology. I think this is me twofold. I think companies may need new technology to both capture and report the information necessary to properly report on ESG data, and then also we may need new technology to actually implement ESG initiatives and make sure that we can hit the reduction targets and things that we're setting as companies and as a society in general. Next, greenwashing is, we're seeing this as a kind of a emerging topic. And greenwashing is essentially an attempt to capitalize on the growing demand for environmentally sound products by making a product, a policy or activity, appear more to be more environmentally friendly or less environmentally damaging than it really is. So we're seeing an increase in litigation in these areas against companies that have been determined to have been doing these greenwashing type activities. And so entities providing ESG disclosures, reporting frameworks, there's some risk. attended a conference over the summer and of kind of food and beverage cooperatives, and one of the things that they brought up was kind of that reluctance to either put out a sort of a reduction target or net zero kind of goal, just because they were worried about the public pressure, the public sentiment if they weren't able to do those things and this potential greenwashing challenge. So something to just be aware of as well. All right, next I'll pass over to Madison for some regulatory update.
Thanks, Jamie. So we're really going to switch gears here, and we are unfortunately limited for time, so this will be a very brief regulation update. I will say I'm focusing on the United States. Outside and internationally, the regulation landscape has changed quite a bit. So this is really just focusing within the United States at this point. If you guys have any questions, because I'm going to go through this pretty quickly, please don't hesitate to reach out. There will be our contact information at the end of this webinar. So starting with the SEC climate disclosure, I'm sure many of you have heard about it. I'm sure you all have heard about the delays, but for a quick refresh, the SEC issued this regulatory proposal in March of 2022. It mandates public companies to disclose climate-related information within your financial reports, such as your 10K. It's expected now to be voted on in April of this year, although the SEC has yet to set a firm date. The delays have been connected to the SEC considering changes to the Scope 3 greenhouse gas disclosures and the materiality threshold that is currently in the proposal. That being said, this hasn't stopped the market from being proactive and understanding their Scope 1, 2, and 3 emissions, in addition to assurance services over those disclosures that they are already calculating for. So I do also want to mention, outside of greenhouse gas emission disclosures, this proposal also includes qualitative disclosure and governance disclosures. And the attestation requirements include Scope 1 and Scope 2 limited assurance, followed by reasonable assurance through a phased-in approach. All right, switching to California. California has been really busy. So California Senate Bill 253, also known as the Climate Corporate Data Accountability Act, SB 253 will require any public or private company earning over $1 billion in annual revenue that has California operations to publicly disclose their greenhouse gas emissions released from their operations and supply chain. This needs to be disclosed within the Greenhouse Gas Protocol, Corporate Accounting and Reporting Standard. Entities will have to submit their emissions information designated by CARB, which is the California Air Resource Board. The organization will develop a publicly accessible digital platform for the emissions data. So fees associated with this Senate bill is up to $500,000 a year. Tentative timelines. So as the bill is currently written, companies will have to disclose Scope 1 and Scope 2 emissions starting in 2026, and Scope 3, which are indirect emissions, beginning in 2027 from the reporting entity's prior fiscal year. So what's next? In addition to the assurance timelines, which are listed here, CARB, the California Air Resource Board, needs to pass the regulations by January 1st of 2025 before companies start filing disclosures in 2026. The California governor has publicly mentioned, some of these timelines might not be feasible, and there is more to come on potential changes. All right, California Senate Bill 261. This bill is also known as the Climate-Related Financial Risk Act. This will require companies, private or public, with greater than $500 million in annual revenues that are also doing business in California to prepare biennial reports disclosing climate-related financial risk in line with the TCFD framework, which is the Task Force on Climate-Related Financial Disclosures. Similar to 253, this bill will require honor before January 1st of 2026 and every 2 years thereafter to prepare this climate-related financial risk report. That being said, what's next? Similar to 253, the California has noted concerns about the overall financial impact of this bill on businesses. So he has instructed CARB to closely monitor those cost impacts in addition to the 2026 implementation date to ensure CARB has sufficient time to carry out these requirements. All right, that was brief and that was quick, but I'm passing it back over to Jamie to close this out.
Perfect. Well, we're running short on time, but I'll briefly touch on this. So, from a standpoint of how we can help, we offer a lot of ESG solutions and opportunities for us to work with food and beverage companies and really help you guys navigate this landscape and kind of address any sort of requirements that you may have. So, a lot of the main things that we do. So from an ESG examination or review standpoint, if you guys have already collected data, aggregated data for ESG or greenhouse gas emissions, and you need, some sort of assurance or a report on that data, we can help with that. We can help, evaluate and implement ESG software solutions or data analytics, those sorts of initiatives if your company is looking to do that. And then we provide a lot of consulting services around ESG as well, from assistance with suppliers, customers, employee codes of conduct, Supply Chain Act compliance, board governance assessments, overall materiality assessments or readiness assessments from an ESG standpoint. We can help with all that. So I guess bottom line is we're here for you if there's something that you feel like you have questions on, or how do you tackle this? I know it's a huge topic with a lot of different moving parts and a lot of considerations, and we'd love to partner with anybody that's looking for some help, or even just looking to have a chat and bounce some ideas off, and we can help point you in the right direction. So just if you have any questions, feel free to let us know there. So the next slide, just some resources for you guys. If you want to have more or want to know information, figure out what some of these acronyms stand for. There's a list here of resources that you can get some more information in these areas. And if and also please let us know. We have a lot more information on any of these areas. So if you have questions and want more in-depth information, please reach out. We can help get you to that as well. Overall, I think we're run over on time. I know there was a couple questions in the chat. We'll follow up with you on those as well. And so if there's any questions or comments, here's our contact information. Please reach out to us directly, or contact information is in the console as well. So thanks so much for joining us today. I know that was fast and furious and a lot of information. So thanks for joining us, and please reach out if you have any questions about this or next steps that you're looking to take. Perfect. Thank you, guys.
Thanks all.